Okay, hello everyone. Welcome to this weekend study session. Let's start off by taking a look at the risk model. We actually went on to a buy alert as of Friday, September 24th, but we're still on that sell signal from August 18th. Buy alert just means that we're close to a sell signal and you could start considering stocks, although, as you know, I still will buy stocks even if we're on a sell signal if they happen to be setting up. Certainly, if we see a proliferation of stocks setting up and working, we're not going to let anything keep us from buying stocks when there's an ample amount of setups. Of course, general market is positive, up, down, volume positive, new highs, new lows, neutral, and stock participation neutral. And that's really been the issue has been the stock participation. That's been the problem for quite some time now, is that we just haven't seen the type of stock participation that we want to see a market that we can get aggressive, certainly on the swing trading side. As of last week, we're up about 55% since the buy signal on the long-term trend model, going all the way back to April 2020, and that has not budged from 100% bullish. So the trend is still our friend, and it's quite strong as far as the long term is concerned. And the Fed also is been on the friendly side as well. So they have the saying, the trend is your friend, or don't fight the Fed, don't fight the tape. We've got both of those on our side. So we're looking at corrections as buying opportunities. There's been some questions about shorting, on a sell signal, but until we get the long term picture bearish and looking like we're in a secular bear market, we still would be on the long side and look for setups to be proliferating here. Of course, we want to see the individual stocks setting up, and a good gauge of that now is our stock trading environment model, which of course is on red right now, and that means that there's a lot of risk. And even though you might see some stocks making new highs, and maybe you're seeing in the news certain names that are doing well, we're measuring a lot of different things based on risk and based on volatility around breakouts and pivot points, and whether we're getting confirmations and violations, whether stocks are too extended, and measuring all that. And that's showing up as a net reading of red right now. Now, we went on a sell signal, and I actually shorted the market not too long ago. So if you take a look at the Dow Jones, that sell signal looked like a pretty good sell signal on the risk model. Since then, we rallied a little bit, but we rolled over and never really went much higher, and certainly didn't go back into new high ground. Of course, my stop was on the S&P 500 going into new high ground. But since then, of course, whoops, sorry about that. Skipped a slide. Since then, we rallied a bit here. And I just came back up to the 20-day and the 50-day, if you will. So we did get a decent little rally back here. If you take a look at the NASDAQ, that same sell signal didn't look like such a good sell signal, right? We got a sell signal one day before the low, and then the NASDAQ just ripped higher and then rolled over recently. We saw some distribution, only to have last week a couple light accumulation days, which improved our general market portion of the model. Of course, that's what put us onto buy alert. But again, this has been, if you look at the Dow, you get a completely different picture than if you're looking at the NASDAQ. And then, of course, if you look at the IBD 50, you get somewhat of a different picture as well, where you've gotten a recent breakout back in August. And since then, you've pulled back to the breakout, and it's really acting quite constructive. If you take a look at this, you can look at the IBD 50 in MarketSmith, or also the FFTY, which is the Innovator Fund. We'll give you a little bit different picture. We're concentrating more on the IBD 50 that's equally weighted in MarketSmith. Then if we move over to the Russell 2000, we see a basing period that's been happening since the beginning of the year. Basically, the entire year, the Russell 2000 has done nothing but pretty much go straight sideways, and still acting constructive from a standpoint of, we could very easily set up here, form a pivot in a couple of days and break out from here. That's been the sort of the story going, all the way back. We go back to April. We started trying to set up, then we leaked off a bit, came back, tried to set up, tried to break out, leaked off again, had a little bit of a pullback, Since then, over here, we could have maybe started coming out if we started seeing a lot of stocks set up in the small cap area, but nope, only to come back again with the market. But in all that time, within the context of just a sideways of consolidation. And then again, if you look at the internals of the market, you take a look at the NASDAQ and compare it to the percentage of stocks above the 200-day, well, you've got a picture of less and less stocks being above their long-term moving average. So that tells you that there's been a correction beneath the surface. So if you remember last week, I talked about, or even the previous week, talked about a stealth correction where you can have where the market corrects beneath the surface and sort of rotates either from group to group or stock to stock beneath the surface. You get that correction. It'll show up sometimes in readings like this, the percentage of stocks above their moving averages. We use the 50-day, the 200, and you'll see that that's already that undercurrent or beneath the surface. You're getting that correction, and meanwhile, the indexes hold up relatively well, and they could hold up and then move higher. And it looks like you didn't get much of a correction, but there was a lot of volatility beneath the surface. Now, another thing, if you take a look at here, is the percentage of bullish advisors, the investors' intelligence. This number has actually been improving. So again, this is really quite an interesting time where we're getting a bifurcation or a split in the market in so many different directions. I'm not sure I've ever seen the market is so bifurcated and so split, with just rapid rotation, and from one day to the next, you just never know what the theme's going to be. So it's been, regardless of what the indexes are doing, it's been a pretty challenging environment. Now, the way that I try to cut through all this noise, and I say this over and over, and I try to illustrate it each week in different ways. I just go right to the stocks, and these are basically, I pointed this out a couple of weeks ago, the 8 criteria or the 8 readings that I'm looking at when I look at individual stocks. And this week I just included little dots there for yellow meaning neutral, red would mean bearish, and of course green would mean bullish or positive. And you can see number of setups, it's about neutral. I mean, we're getting some setups. Breakouts, again, neutral. We're getting some breakouts and some are not. Confirmations, that's how the stocks act after they break out. Some are confirming. We do see some. I'd have to say that's a little bit probably less than neutral. Violations, again, some are violating, some are not. Pivot failures, we've seen less lately, but there were some pivot failures recently. Base failures, we're not seeing a lot of base failures. So that's a good sign. You start seeing base failures, then you start getting into the possibility of a much bigger correction. So that's good for now. Stop triggers, this has been really a problem. I'd have to say this is probably, we could actually put this on red probably, but certainly neutral at best, where you're getting stops triggered. I guess, from a short-term standpoint, this might be green, but from a longer-term standpoint or a swing trading standpoint, it's been quite challenging. And then stocks extended from bases where this will happen, or I'll try to gauge this when things are going quite well, and maybe you just get a lot of breakouts and looks really great, but you're just getting too many stocks are extended and there's not as many coming out of bases, so you just got to hold off and wait to have either more setups or get pullbacks and not chase those stocks extended. So this is really what I'm looking at, and I sort of pound this over and over and over again, where you really want to just get good at reading this, and just forgetting about the indexes, and this is going to lead you to being in stocks when the conditions are right for this particular style, and out when it's not an environment that's healthy. So I remember last week we looked at PAG, that's Penske Automotive, and I pointed this out as a setup that is really quite perfect. I mean, it really is an excellent looking setup, big base. If you remember, lots of consolidation going on this right side where you're going through tightenings, a perfect VCP setup. You had the volume contract in the tight area, and then when it broke out, you saw a big volume expansion in recent margins. You had expansion or acceleration, if you will, in the earnings and in the sales. So it's really hitting on all cylinders, right? So then again, Last week, we did get after it broke out. You got a pullback just for one day, and you can see the pullback was on light volume, and then you see right back at the new high ground, and the volume came in again. That's classic tennis ball action. And again, I sold this stock, and I'm taking the short-term profits and the swing profits, 15, 18, 20%. I think that's a pretty good gain right now, considering of, what's been happening on the swing trade side. But, certainly this is acting perfectly fine. And if you were to make a choice to hold a stock, this would be the type of stock that you try to play for a bigger move, because you're getting the tennis ball action, you're getting the breakout, the volume confirmation, you've got everything there coming out of a large base. So again, this is one that you probably want to hold if you're going for a bigger move. That's acting fine. Let's put it that way. So I bought it, if you remember, right here. So it tightened up. Now that looked, great at the time. That was literally picture perfect. But then you had a little bit of pullback, but that wasn't enough to hit my stop, and it actually improved. And so what I pointed out to everybody was, if you're not in the stock, or if you went in small, now that it's improved, you can actually add to that position, or you can take an initial position if you haven't yet taken it, because the stock has actually improved. It spent more time on the right side, and really just got even better. So this is a perfect example of how a stock can actually not move or break out after you buy it, or follow through and get that confirmation, but actually improve the setup and have an additional buy point. And that the key is that you're not buying it while it's up extended. That additional buy point is happening still within the base building process. So I just wanted to point that out. Another thing I want to show you here, and this keeps jumping, I don't know, there's something wrong with my mouse here, is the weekly. If you take a look at the weekly here, I mean, this is really, look at this weekly, just a big cup with handle, and you got the VCP characteristics. And if you look at the volume, you'll see the exact same thing that you're going to see on the daily, where you get the contraction of volume, and then you get the expansion on the breakout. Nothing different. It again, VCP, supply demand. It knows no time. This is gonna be the same if you look on a 1 minute, a 5 minute chart, a daily chart, or a weekly chart. It's all gonna be it'll all play out the same way under these circumstances of looking for VCPs and getting proper setups. So again, always consult that weekly chart. And on the weekly chart, this also looked really great, and it's confirming here, showing a great follow through. So to summarize, before we go into individual stocks, risk model has improved, but again, we're on a buy alert. Stock model is still red, so I'd be cautious here with the longer term picture. Still bullish. We're certainly looking for setups, but this is a split market to the extent that I've never seen it this split. It really is quite incredible how bifurcated the market is. It's extremely selective at times, and it's very rotational. I mean, you saw just recently, again, it went back to the cyclicals, and then some of them rolled over, and it just one day to the next, you just never know where the money's going to rotate. So there's really nothing you can really sink your teeth in on. I saw this, there's software stocks were starting to show up as a group. The semis are also improving. So that's something that recently I saw as far as group work is concerned. But I think it's just too early to get really aggressive just yet, especially with having the market just rally back after it broke. I try to be very careful on the first rally back after a market breaks down and you get distribution. Even if I get a buy signal, the only time I think I would probably maybe get real aggressive under that circumstance would be if there was a lot of setups, and they all start breaking out real quick. I might, even then I wouldn't get very aggressive, but I might start jumping in a little bit more aggressively than I would if there were less setups like now. But the real key is that you need to be prepared to get aggressive, because you have to move very quickly. If things start improving, you want to move very quickly, because that window of opportunity is going to open up, and you want to make sure that you're ready and prepared to take those opportunities. Okay, so let's take a look. Let's look at some buy alert names. So this is some of the names that I've come up with so far here. Again, there may be more names by tomorrow morning, and then of course intraday. Let's see here. Oh, that's why. Okay. I was wondering why I couldn't get my previous charts to fit. It was because the screen was not, I'm sorry, the Zoom was not sized to this screen. All right. So taking a look here, this again, this AVLR, let me just pull this up. I want to look at another screen here. This is software stock, right? Yeah, I want to make sure. Yeah, this is a stock in the software area. A lot of the stocks in the software group, I'm noticing that the software group is acting pretty well, but a lot of them are extended. Some of the stocks that are the higher RS. So this may be more of a laggard type name, but it's showing up. It's got a pretty big base here. This is just a big cup with handle, getting pretty constructive here on the right side. Looking at this weekly, so this could break out here. That's one that I have on here. This CYTK. This is one that I bought some of if on the 22nd, but it's improving. Just like PAG, where it got better as it stayed in that base. This is also improving because you're staying tight here. And if this comes out, if you haven't bought this, you probably want to buy this if this breaks out. But I wouldn't anticipate it. Let it, make sure you let it come out and get above these recent highs here. DEN is another one. Bought some of this. Now it broke out here on Thursday, and I was looking to buy it. I wanted to go one more day to pause here, and it did not. So I hesitated on it. It got away from me a bit, but then when it came back to the breakout, so then I came into it. So that's acting pretty good. We'll keep that on because it's still very close to the breakout point. DLO. So this is one you had a big gap here, and now you just put this little base on base, and now again a day inside here, and it could be bought. I would like to see it go a couple of days and really stay tight and quiet, but it may not. It may just go here. So keep an eye on that if it opens up quiet. JBT. So this is another one where let's take a look at a weekly. You got a nice big base here. I like the action. I love the this weekly where you had the volume above average and you had a good close all the way up at the high there. That's a nice tip off on the right side. And then we went inside only to break out on the weekly. This is one, of course, this was spready. So I personally stayed away from it and was careful with this because it was spready. But it pulled all the way back. I don't like the close on the low. That I would like to see some support there at the breakout, but it's still fine. And I would watch this. And if it comes in a bit and comes back, below the breakout, let's watch how it acts, and we might be able to get that on a pullback buy. LQDT, I've been watching for a while. This one is just building this right side. And again, I should probably hold on. Let me just zoom out a little bit. Yeah, so you can see a little more on the daily. You had this big move here, and then since then you drifted back, and you're forming a nice base, and you've got this VCP. We're forming a cheat. We could get a little cheat within the cheat here if we go inside here for a day or two. Start buying it, maybe coming out here. I'm not sure I'd buy my whole position there, but certainly you can start a position. Again, look at the weekly. You've got a nice VCP forming here, a cup with handle, if you will. So that looks pretty good. MDB, this one, I don't normally trade when you come out of a base. You get these extended post gap plays. It's a lower success rate for me, at least. But I think this could be certainly tradable, and it definitely has something going on here. I like the way it's holding up too after the gap. And it's put in some consolidation. I know some people that are pretty smart and they like this company as far as the fundamentals are concerned. MNDY is another one that I'm interested in. Again, it turned up off the lows here only to undercut the low. And now, if you can stay tight here, go inside, starts moving up from there, get above this pivot. You got that low cheat within this power play. You've only come off, let's see, how far off the highs? About 20%. So it's perfect. This is really exactly, what you're looking for, about a 20% pullback or less. And then if you can get a cheat within the power play, that's a great place to enter or at least start your position. So let's watch that. MNRL. Mary Nancy, you had this decline right here, but since then you've tightened up and you're getting tight. I like to see the 50-day. We'd love to see this stay tight a little bit, let that 50-day flatten out. But that's one that has a decent base. OAS, putting this out last week. Another one where you got that hiccup right there for a day, but then it comes back, goes tight, volume way, way down here. So it's really tightening up. This could break out here and certainly be on the consideration for buy. I'm looking at Pfizer here. Again, this is sort of bottom fishing it right now. This is really the earliest you would ever use a low cheat because it has not broken the downtrend yet. So that's still technically, not able to make what I call the turn. You do have the 50-day in an uptrend. Now you've come below it. And so I have a little caveat. If the 50 days in an uptrend and you go below the 50-day in an uptrend while you're in a pretty strong move, I'll try to play the very low cheat, like if there's a cheat just below it, I'll try to play that even if it hadn't broken the downtrend. Yet. I'm tongue twisted here. Sorry. Another one here. So this PZZA, which is Papa John's. This is one that I was really interested over here, and we didn't play this right here. It was a big coupled handle, real tight. And since then, it's really just held up like a champ. So for a trade, this could definitely be something that you can maybe play for a trade. The short-term relative strength has been great. You see, it's held the 20-day this entire time. It's held up through this pullback in the market, and it's extremely tight with the volume coming in here. So this could be a trade. RVLV is one that still needs work on the right side here, but it is forming this base. You did have this decline here, and it's been sort of volatile. So it definitely needs to tighten up, and it needs to quiet down. So that's probably premature to be putting that on buy alert. That should probably be on my high on deck. SIG's another one where, probably more high on deck, but certainly tight enough on this right side to entertain, this is a breakout. If it moves above these recent highs here, it's tight enough. I'm watching the SOX index, because it's still, holding up here. This is one that I probably should have never gotten stopped out in the first place. I choked it off. Remember, I entered right here. It did pull back and come back below break even, but never really came back enough. This low was really the key low. So I got out of there probably a little too soon. Since then, it's really holding up. It had this one day where when the market got real weak, it pulled back, but really within the context of just putting in a big base here. So if we look at the weekly here, it's held up really well, and it had a nice close up by the top of the weekly range last week. So I'm watching the stocks. I've been seeing there are a lot of stocks in the semiconductor area that have held up, and some that are breaking out too. This XAIR. This is a power play type situation where it came out a week or so ago, and then since then it's just pulling back here. That may still be viable. As far as I got some names that are on deck, these are not on my buy alert list just yet, but they're close. ACLS, one that needs some right side work. ASPN, look at that. This is staying tight, but again, this never really built a right side. So it's acting very strong from a short-term relative strength standpoint. This is acting really good, but I'm usually careful with these stocks that don't come out of larger bases and they run up, and they can work. But when you're coming off these small little pullbacks or natural reactions, you have to be careful with those, because they can get volatile and undercut that previous low. Once you go through 2 or 3 natural reactions, usually the next natural reaction, even if you break out, a lot of times they come back and they undercut a low and they create a shakeout, and they get more volatile, because now you've made a good size move, and now you're running into profit taking. So I want to be a little careful there. CRWD. So this is one where I got knocked out of this before, and then it came ripping back. This is the, make you feel like a dummy trade, right? And then since then, it's coming back again. So it's really all over the place. But, and this is probably pardon the pun, a crowded trade. But if it tightens up here, you do get a little pullback. I'm sorry, a little cheat area here within that pullback. Again, this is my on deck list, not my buy alert list. So Dillard's, this could very easily get to my buy alert very quickly. Even if it pulls back here for a day, I probably put it on buy alert looking for a pullback buy. Again, this is a stock that I never thought I'd see Dillard department stores as a as a 99 relative strength, but that alone tells me it's got a lot of power. EYEI, of course, another one that's just been holding up really good during the pullback and looks like it wants higher. You can try to be creative there if you want to buy that. FND, decent size, decent little base here, holding up again against the market. Kids, KIDS, another one where you're trying to form a base, a little bit sloppy, but could tighten up. Lulu, again, Here's one where you had this big gap, and now, this is a post gap play. I'm always careful with these. I play them sometimes, but these rarely work for me in the way that I'd really want. So again, I'd say it's a lower probability setup. SAIA is in the trucking area, and again, this is forming a pretty big base. Watching the right side here, that's close. SIMO, another one, big move here. And since then, just consolidating and trying to tighten up and get that VCP action. So I'm watching this to see if we can get some type of pivot here on the right side. This SKY, this is one that I saw as the leader in this group a while back. This was really perfect right here. And if you remember, this is one that we bought coming out here. And since then, it's been acting really well. So, we might be able to add this if we stay tight here and it starts moving up. TILE, this is one that is coming off of this low cheat setup potential. And then Trox, I know we had a question or a couple questions, and one in particular about Trox and why I put this on. Well, this was a cheat area right here. So you broke out, nice move, and now you're just forming a cup with handle, and that was a pullback buy. I put this on buy alert because you had a pullback buy setting up. So again, this is not really an extended stock. I know this looks like it made this big move, but you're still within a base here. I mean, obviously, in hindsight, you'd like to be over here, right? It would be better to buy this cheat area than to buy this pullback buy. But again, it's still within a base. Tesla, this came out of a base pretty nicely. And again, this is another one where I bought it here and I choked it off, at break even. Another one I probably should have given more room, but I said, let me just I'm not going to protect myself here and not get crazy because things aren't working too well. And I could always get back in. And again, this came out and probably should have just bought this on Friday. I pointed it out on breakout alert and tried to give as much heads up on this. Had a good close, so this really looks good from that standpoint. Even you look at it on a big on a weekly, on this big weekly base. I mean, if this starts getting volatile here, volatile on this right side, it certainly will look like a stage 3. It'll start looking toppy. But as of right now, it just looks like another base within that stage 2 uptrend. Let's see, U-Haul, another one, UHAL, trying to set up this right side. XLNX, we had that on last week. It was tight, then it got a little loose here, and now trying to come back. So watching that. ZI, another one where this one's just held up. That one doesn't really have much of a base, but it's holding up quite strong. And the CFLT, which is really holding up like a champ here, and it's moved up off the lows here, almost about 100%. So it could be a power play setting up, but again, it's extended. It's a little bit, volatile on this right side. I wouldn't just buy it right here blindly, but something that I'm watching. So I got a fairly decent watch list, maybe another, 30, 40 names on my watch list. That's my on deck list, my buy alert list. I guess I got maybe 15, 20 names. There's some names here. Something like an SNAP. I wanted to buy this, and it started moving out in the morning. Then it came back in. It looked like it was going to reverse, and I said, okay, we're probably going to need to build the right side. And then it came back, reasserted itself, and ended up taking off. So again, these trades that are, and if you see here, the last time I bought it was way back here, or at least the last time I have it on this chart. Again, these stocks that are really in the public's eye, you got to, and had gaps on earnings, you got to be careful because they're very crowded. You get a lot of volatility. So just be careful with these. Definitely don't chase them. Something like a CAR. This is another one that broke out. And I love this. Is good action. When you get a stock, it breaks out of a base here. You get a reversal. You'll pull back, and now boom, boom. You get a, what is it? 1, 2, 3, 4-day reversal recovery. That's right on schedule. That's exactly what you want to see happening. The breakout was actually right here. This is, I'll mark that for you. Hold on. Right there. So this, could have very easily stopped you out. This undercut the pivot. But again, let's see, look what that percentage would have been coming out if you bought it right here. Yeah, you're down. So that's enough to knock you out. And now it comes ripping back, and you get, this is what we call the Hardaway crossover, where you buy it breaking out, undercuts previous low, like in the low of the pivot, stops you, and then wham, comes right back and takes off. But on the pullback, you did get a pullback buy. So this is why we have these various techniques. You're not going to always get an opportunity to get back on board or buy in the first place. Sometimes stock's going to take off and you don't get any buy point. That's a low risk buy point. There's other times where you're going to get a whole bunch of opportunities, right? So again, you just have to, try to get on board at these various levels, starting with the low cheat, your handle, pull back to the breakout. If you can't get on all those, 4 or 5 opportunities, then you just got to let it go and you got to try to find something else. SEAS, the earnings would look kind of shabby as far as the estimates and stuff. So I stayed away from this, but it did break out just recently. And I'm also watching this group, HGV. I've been watching for a while. One that in a good market, I would have been buying it all day on 914. I stayed away. Then it pulled back and ripping back. And you got WH, of course, which is Wyndham, in that same group that recently broke out. And then you got Hilton also. This group looks like it's moving like a group move here. So it's a little sloppy on the right side and now a little bit extended. So I hadn't been able to get on board this, but it looks like this group is trying to make a move here. I'm just going to close here with, if you let the indexes or let any stocks that are breaking out start to force you into making bad decisions and forcing trades, and you get that fear of missing out, and that is what's driving you and driving your emotions, I got news for you. You're going to have a very tough time with stock trading. You've got to have rules. You got to go in with a plan. Have the stocks that you're interested in. If they get through your buy points, fine. You set your stops. Things are working. You move your exposure up and you get more aggressive. But if you start chasing your tail and letting the market and letting the indexes and letting the pressure of stocks rallying and you're not in them force you into chasing, you're gonna be all over the place. So just stay disciplined and continue to wait it out. If stocks aren't meeting the criteria or you're not able to get the traction, all I can tell you is you got to be disciplined and you got to wait it out and ignore the market. You might have to miss a rally every now and then, but believe me, it will pay off. It'll pay off in the long run as you learn to get disciplined. And if you're, if things aren't going well, then it's, one of two things: either the market's not good or your stock criteria is not good. So check your stock criteria. As long as your criteria is good, then, then it's the market. And it doesn't mean just because the market's going higher doesn't mean it's a good market. When I say the market, I mean the indexes. Dow hitting new highs does not mean it's a good market for you. A good market is when stocks are setting up in low risk buy points from constructive bases, and they're working for you. You're buying them, they're breaking out. You don't have a lot of pressure on your portfolio or on your emotions with volatility. They're holding your stops on balance, and the reward is paying for the risk. That's a market that's good, not just because the indexes are doing well. So focus on that and you'll do just fine. So tomorrow I'll see you in the training room for Q&A I'll be there, of course, and with Mark Ritchie and Bob Weissman. We'll see you then. Okay. Bye-bye.